'Cause red light spells danger. Oh, have the markets been cut to ribbons this week? Let's have a chat about it, because the tariffs have caused merry mayhem. I'm going to have a little look at my Vanguard, show you the damage that's been done to it. On the surface, it looks horrendous, but am I worried?
Fuck no!
No, I'm not, because I've seen it all before, and that's the beauty of being old, because that's old, you know, boys and girls.
It's been 84 years.
And not only am I old, I'm knackered and I need a coffee, because we all know Scruffy likes a coffee. So let's have a little chat. There's a couple of things I'm going to go through with this coffee and Scruff. And if you haven't seen Coffee with Scruff before, it's just me, the camera, a cup of coffee, and telling you my thoughts across the week. Now, if you were looking earlier in the week, you saw me draw some money out of the small account, and I'll do an update on that as well. I took quite a bit of money out, and that account's going to get shut down, and I'm going to lower the leverage and restart it probably the end of this month. So this will be the last time that you see that. But the money that I take from it gets built up inside a Vanguard. Now, Vanguard's an index tracker that I use for long-term growth. I'm not looking to cash this in for 5, maybe even 10 years. You know, it's kind of something I'm building up for later in life. And the small accounts are perfect for building it.
Are you serious?
But when you saw the market crash this week, you know, and it's like, and I was looking at LinkedIn and the news, and it's like, oh, it's the end of the world. It's terrible.
It's the end of the world.
I don't think it is. Not really. And whether you love Trump or hate him, I think he's played quite a clever move, because when you're talking about the tariffs and what's going on, essentially what he's done is he's bringing people to the table to talk, whereas before the tariffs, they didn't have to. They weren't interested in anything. You know, we can flood your country with cheap product, and so what? So now what he's doing is he's actually bringing them to the fold where they'll talk to him, and now he'll be able to export into their countries as well, rather than what some of them are doing, which is a tit for tat sort of tariff raid. Oh, have you putting tariffs on us? We putting tariffs on you, and all this sort of thing. No, he's just opened up a dialogue. So from a purely business perspective, I don't think what he's done is actually as catastrophic as what people think. I think maybe the tariffs will change over the next 3 to 6 months. Now, this is my own personal viewpoint. Whether he'll sort of relent a bit, I think he probably will. You know, it's just a case of, this is the opening gambit.
All right, let's see what you got.
And the market reacts the way that they always do, with fear and greed. Now, there's an old sort of saying, you buy when fearful and you sell when greedy. Well, guess what I'll be doing today? And I'll show you that later. But let's define a couple of things first of all. And I'll pull a chart up and I'll kind of explain it. So there are kind of 4 variations of a market cycle. You know, you've got pullbacks, corrections, crashes, and reversals. All right, so that's like the 4 disciplines. Now, if it's a pullback, well, there's nothing really to worry about. 5-10% dip in the market price. Lasts maybe a couple of days, couple of weeks. Doesn't really matter. It's just a pullback on a bigger trend, and then it'll push up before it moves up again. We see this all the time. Now, what you got to remember is when you're looking at the major stock market, you're looking at high time frames. You're looking at dailies, weeklies, monthlies, where the big boys play. You know, you see pullbacks on hourly charts every day. You know, so when it comes onto a daily chart, like I say, it looks horrendous, but it's not. Because if you think about an ATR of a product, if it's got an ATR of 100 and it's pulling back for 3 days. Well, in theory, that's 300 pips it's going to drop off. But then it might push up for 5. So it's actually 200 above where it started. And these are the things that you need to worry about. Then you have things like a correction. Now, a correction's where it's 10, 20% drop of the market. And it can take a few weeks to 3 months. And it's where it's pulling back. It's lots of profit taking. It's balancing out. And then it can move up again. So it's really nothing to worry about. These wobble zones that people panic over, it's just the cycle of the market. Then you have something like a crash. Now, a crash is, well, they can really be incredibly sharp. They're definitely a worry.
When Garmadon crashes the stock market.
Because we're talking like 20, 30% wiped off very, very quickly. Crash itself is almost like a flash in the pan. You might hear the term falling knife, and you never try and catch a falling knife. Okay, so you kind of wait. Now, when something like this comes, so we've seen it 2008, COVID, 2015, and you've heard the terms like Black Monday, all these different things. These crashes come in and they wipe out. They are like, whoa, that is pretty darn nasty. I mean, you can think sort of 2020, the market lost 30% in a single month, but then it bounced back in 5 months. So think about it, you know. But 2008, that was kind of something slightly different. There was a big crash then, but when it bottomed out, it then, if you look at the S&P 500, it went into a bull run that lasted about 11 years. So are these things to be worried about? And then you've got full-on reversals where the trend is actually changing completely round. You know, it's out of a bull run, it's now in a bear market running down, but the stock markets inevitably are geared to move higher over and over. Now, one of the easiest things to do is kind of, I'll show you it on a chart.
Let's see it.
So if I pull a chart up, this is kind of the daily S&P 500. Okay, and you think, holy shit, look at that. All right, that is horrendous. But there is pullbacks inside it. So that's essentially on a sell-off. The last 3 days has been horrific. Anything that is aggressively moved like that can bounce back aggressively. You can see it there, bounced up and it pulled back aggressively and then it fell off the cliff. But this is a daily chart. Let's look at the big picture of what this market actually is. So if you go out to a monthly chart and you start plotting where these areas are, well, down here, there's your 2008 crash. Whoosh, down it come. You know, bottomed out at this point, 2008, and then it just fell for about a year. You know, down it went. But when it bottomed out here, look at the run. All the way up. Came into COVID. You know, that's in and around this time here. The market fell for 3 months. Down. But really, in the grand scheme of things, was it that bad? Look where it come. So it only pulled down a small amount of this area here. So you're thinking, holy shit, this is terrible.
Better out than in, I always say.
Right. Then you pull it back through. Again, we had a financial crisis in 22. Pull down here. It looks horrendous. But if you're a long-term investor, these are absolutely wonderful things to get into because you can buy as that moves down, DCA, dollar cost averaging. And then when it starts pulling back up, all of these cheap products you've bought then accelerate and give you more money.
I'd buy that for $1.
Now look at the structure of this. What's happening here is not that different. It is accelerated at this point because we do have big chunky old candles, but they are also respecting sort of key levels and ratios as the market is moving down. Look, It's horrendous. So even if that came all the way down to here, that bounce back would be phenomenal, you know, because what you see whenever a market crashes down, the accelerant above it is pretty darn good. So I'm not overly concerned about this at this moment in time. Now, I'm just using the S&P 500 as a barometer. Now, the markets I look at are these. I use an all cap. Now, this particular all cap, if I sort of go out to the monthly, again, it's following a similar path. I'm not overly worried about it. I'm going to build into this particular chart. In fact, I'll do it right now. Give us a second. I'll pause the camera and I'll show you my Vanguard. And then you can have a look at my face and you can see how worried I am because there's a colossal amount of money being wiped out.
Oh shit, oh shit, oh shit.
But there we go. Give us a second. Okay, guys. So this is the current state of play with my Vanguard. The highest it got to was about 108,000. This is now dropped back to 96, well, just shy of 96.4. Okay. A colossal amount of money coming out of this. And when you see this, you'll think, oh my God, look at the state of that. In the last 2 months, there's a horrendous amount wiped out of it. But that's what this is all about. You look at it moving up steadily across the years. Now, I'm intending on this to increase. Let's say I'm 55 next week.
You dirty old man.
Is it next week or the week after? 15th anyway. So I've got 5 years to get to 60. I'm not worried about this in the slightest. I'm building this up for a longer term goal. So as this is moving against me and I put in my investments, and you'll see here, the main investment, obviously it's got the most money in it, lost 7 grand. Okay, so it's totally lost 7 grand over the course of the period. And the small account builder, it's still got over 5 grand in it. It's lost 738. And you've got to remember that started with a fiver in it. So I had 5 quid in that. And I've been feeding into it from my trading profits on the small account. Let me just show you that before we go any further.
Well, we're waiting.
That's switched on. Let's pull that into place. So this is the main one. I use Black Bull for this, by the way, guys. Just pull up the toolbox. So if I click in here, the history. If you remember, what I do is I get it to a baseline, I build it up a little bit, and then I shut the account down and I drop the leverage. The reason I drop the leverage is I actually want the leverage as low as I can be. This thing's at like 400 to 1. It's way too big. But I'm just steadily chunking away at it. So there's 750. And you come through, there's all the blues. You'll see there's black in there as well. That's withdrawals. Come down. Don't get it right all the time. Like this day, I had a bad day, but all of the blues paid all that off. So I wasn't worried about that. Again, so there's a bit more money coming out of it. Blues, blues, blues. Just keep it going. Bit of a rough day there. But again, it was net positive. I worked to net positives. Come down. Had a stinking day there. Ended up losing about 200 quid on the day. But all of the rest of it paid it all off. Down. Bit sacrificed there the other day. Drew out another 2 grand. Now, you saw me do that the other day. There was a little bit extra gone in from Save the Change. So I've got £2,000 straight to go into the markets today. Kept on going. And there you go. So from the 1st of March to now, this has generated just shy of £4,000 in profits. Okay, take out your costs. I'm left with 3,768, and take out the withdrawals. I've withdrawn out of it 3,264, leaving me a balance of 1,253 that I'm working on at the moment. So that money is this. So the profits I just harvest into here. Now it's taken a slam of 738. Am I worried? No, not in the slightest. In fact, what I'm going to do is I'm going to top it up by £2,000.
Really?
Really?
So I'm going to do that right now. So we're going to put our 2,000 in. There's another reason why I'm doing it today. There was a rumble in the jungle on Monday when I was taking this out about the tariffs coming, etc. And I wanted to hang fire, but I wanted the money out because it was the end of the month as well. And I wanted to see what was happening. And I have to put it in today to catch the end of the tax year. Okay. So it's going to be £2,000 with a debit card. Put that there. Right. I'm going to put in my bank details. So I'll have to pause now. Okay, so my bank details are in. When I click submit, it's going to show them again. So I'm going to have to pause it because it's going to ask for a code on the phone to pay for it. Okay, so I'll do that now. Okay, guys, so that's done. Now, what I'm also doing is, because we're starting a new tax year, April to April, for all that started in January, I'm tracking it over on this particular sheet here. So what we've done is, so what's the date today? So put the date in, just keep it on this, just straight £2,000 went in up there. So now just need to adjust what's going on up here. And then we can see where we are. So if I go to my investments again, drop the portfolio investments, you'll see the cash has now jumped up to 2,372 because I've paid the money in. Okay. So what I do is I look at the investment. It's 506699, and the cash, because we track the cash as well, is 2,372. So if I pull that across, sort of April, because I'm going April to April. The reason why I did this, it's in the Discord. They wanted to start a tax year. And if you go through the series, you'll understand it without me fully explaining it. But that's the investments. That's the cash. They're the two that hold the profits from the small accounts trading that I do. And there is two accounts for that. Let me pull up the other one. I'll kind of show you that as well. So there's another one here, and I just mirror it. Okay, just do the same sort of thing. Okay, and again, you would have seen that on Monday when that was set up. Now that one changed slightly because I had to show one of the guys how to open up an account, so I did it with that. Anyway, cut long story short, I'm looking for 10,000 quid. You know, that's what I want out of the Vanguard to get to. So if I just move that over, you'll see it. There's the target that I set. So from January the 1st, we now at 7,070 banked inside of this. Okay. So that's bank money. But I've also had a holiday out of it. I've had a couple of holidays out of it. So what's the moral of that story? Well, the moral of the story is never worry.
Who'd be stupid enough to do that?
Justify, stupid.
You know, I bank money all the time so I can enjoy it, and then I put it into the savings, and the savings look after themselves. But I also plan things out quite a lot. Now, the planning with the Vanguard, as I said earlier on, is like a 5-year plan. And the reason why I started with what's a pullback, what's a correction, a reversal, and a crash, etc., was to kind of show and illustrate they don't last. And if it's going to last for a few years, it's not really a bigger problem. Because as long as I'm DCing into it, it'll actually make money as it's going down by buying cheaper units. No different than when you see me on my daily trading and I'm actually building backwards into a trade. What I'm doing is I'm getting better prices all the time for it to move forward. The problem with Vanguard and investing is People have knee-jerk reactions. And they go, oh my God, the market crashed today at 15%. I've lost all this money. You haven't. You haven't lost it till you go to spend it. No, I don't want to spend mine yet. I don't want to spend it for 5 years. So in that scenario, it doesn't matter. In fact, it's a good thing. I am quite pleased the market is corrected on itself and it's crashed down, because now I can take advantage of it and make money. One of the ways that I did quite well with this house was in COVID, the FTSE crashed to the ground. It went to the floor. I bought it when people were selling it. And then when it came back, made me decent money, gave me a lump sum, and I was able to have some nice treats with it. That, my friends, is trading. It's not reacting with sort of fear when something goes wrong, and it's certainly not hanging on to it with greed. What it's doing is just looking at the bigger picture and thinking, well, it's only a small move in a bigger picture. And then in 2 or 3 years' time, what's happening today will pay off. So that investment of my time and my money should give me a good future.
I love it when a plan comes together.
So that's my take on it. Be interested in yours. No doubt there'll be plenty of comments about the situation at the moment. But I don't think it's all bad. I don't think it's doom and gloom at all. I just think it's been a long time coming. And, all right, the speeches this week have been the catalyst. But I do think it was primed to drop anyway. It just sort of accelerated it. And hopefully it's accelerated it to the very bottom. And therefore, the upturn will start. But you got to remember, all these things happen. When the Twin Towers got hit, the S&P took a huge hit on the day. Massive hit. But it corrected by the next morning. So what goes down must come up, is the way I look at it. Anyway, I just wanted to update the Vanguard because people get asked. I'll do it again sometime in May. And the announcement that I was going to make was this small account that I'm building up is going to move slightly away from this channel. I do have another channel called Scruffy Adventures, because anybody who watches me knows I travel a lot. You know, certainly every 6 weeks or so I'm on holiday. If I'm not on holiday, I'm sort of treating Joanne to a hotel stay. And when I was in Spain recently, I was saying, why don't you just do trade anywhere? And I thought, you know something, I'm not a vlogger and I can't really do the walking around the hotel thing. So what I think I'll do is be every couple of weeks or whatever, I will be in a hotel. You never know. Drop in the comments your town. I might actually hook up in the town. And when I'm in hotels like that, I often have a drink with people who recognize me. I'm quite open that way. Don't do cities much though. So it would have to be rural places, because I'm a country bumpkin.
Just a poor country bumpkin.
I'm going to do trade anywhere on Scruffy Adventures. So if I'm on holiday, I'll do a trade while I'm on holiday. And I'll show you can do this wherever and whatever time zone that you're in. Just a thought. Anyway, as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.